Hello students, I am Rahul Sharat Joshi, Assistant Professor at the Bhopal School of Social Sciences, and I am taking lectures of income tax. In the last lecture we have discussed about the basics of income from business. Now in today's lecture we would be talking about the deductions which are expressly allowed in case of income from business. So let's start. The first one is expenses in respect of business premises. Now when the premises are occupied by the SAC as tenant, then what all expenses are deductible? First would be the rent paid for such premises, and second would be the cost of repairs. And what are the expenses deductible if the premises is occupied by the SAC as owner? In that case, the expenses which would be deductible are repair charges, land revenue, local taxes or municipal taxes, and insurance premium regarding the building. Second would be repairs and insurance of machinery, plant and furniture. Third would be the tea development account, coffee development account and the rubber development account. In this case, the amount of deduction shall be a sum equal to the amount so deposited or 40% of the profit of such business. Next would be expenditure on scientific research. In this case, what all amount will be deductible? All revenue expenditure, number one. Next, if any sum is paid for scientific research to an approved research association or a university or a college, in that case 150% of the sum such paid shall be deductible, and if any amount is paid for social or statistical research, in that case 100% of the amount paid shall be deductible. If there is any expenditure on in-house research and development, in that case 150% of the sum paid shall be deductible. Next is deduction in case of preliminary expenses. Now, this deduction is available to an Indian company or a person who is resident in India. Now, what is the quantum of deduction? Deduction of an amount equal to 1/5 of such expenditure for each of the 5 successive previous year. I repeat, for each of the 5 successive previous year, beginning with the previous year in which the business commences. And what is the maximum limit? Deduction shall not exceed 5% of the cost of the project. Next is section 36, which talks about other deductions. Now, what all things are covered under other deductions? Point number 1, insurance premium for the health of employees, bonus or commission, then interest on borrowed capital, contribution made to provident fund, bad debts, then expenditure on family planning by a company to promote family planning among its employees. In this case, revenue expenditure would be deductible, and if it is a capital expenditure, then it is deductible in 5 equal installments. Next is expenses in connection with income tax proceedings. And now we have section 37, which talks about general deductions. In this case, the very first point is, for an expenditure to fall under section 37, the first point is the expenditure should not be of the nature as described in section 30 to 36. Then it should be in respect of a business carried on by the SAC. It should have been laid out wholly for the purpose of such business. Next, it should not be in the nature of personal expense of the SAC. Next, it should not be in the nature of capital expenditure. And the last one, it should relate to the previous year concerned. Now, there are certain deductions which are allowable only on actual payment basis. Section 43B talks about this. Now, what are those deductions which are allowable only on actual payment? Under this, point number 1, any sum payable by the SAC by way of tax, duty, cess or fee. Second would be any sum payable by an SAC as an employer by way of contribution to any provident fund, gratuity fund. Third would be any sum payable to an employee as bonus or commission. And next would be any sum payable by the SAC in lieu of earned leave. There are certain expenses not deductible in certain cases. First one would be payment to relative or associate concern in excess of the market rate. Second is payment in cash. Now in this case, if any expenditure in respect of which payment or aggregate of payment made to a person in a day is exceeding rupees 10,000 and that payment is made otherwise than by an account payee check, then it won't be deductible. However, if the payment is made for plying, hiring or leasing goods carriages, then the limit of disallowance shall be exceeding rupees 35,000 instead of rupees 10,000, right? But there are certain exceptions for this particular point. Number one, if the payment is made in rural areas or small towns where no banking facilities are available, then this won't apply. Then payment made to banks or life insurance corporation. Then payment which is required to be made on a date on which banks are closed, or payment is made to a government and such payment is required to be made in legal tender. So these are all the exceptions for this particular point. Then there are other expenses like drawings or personal expenses of proprietor or partners. Then any provision or transfer to reserve, amount paid as charity or presents. Then penalties paid by the SSC for infringement of law, a contribution made to a political parties. These are all again disallowable expenses. So that's all from my side for this particular lecture. Thank you.